Уважаемые гости и участники Конгресса, просим вас занять свои места в зрительном зале. Мы начинаем через 2 минуты.
В том числе путем гармонизации финансового законодательства, работа по формированию общего вызовами и ускоренной цифровизацией. В этих условиях сотрудничество банков развития необходимо для развития всего региона и каждой страны в частности. Банки развития и коммерческие банки имеют свои
Development banks and
уникальные
commercial
ниши
banks
и
have
уже
their
сейчас
unique advantages, and they're transforming themselves into an ecosystem that brings together multiple opportunities for all the participants of this Eurasian space. So European Development Bank
механизма
is
взаимных
one of
расчетов
those
в
prime
национальных
developers,
валютах.
market makers, intercurrency exchanges, as well as other things. This is the topic of this session: joint unified financial markets, opportunities and risks. So I would like to welcome right now on this stage Alexei Moiseev, Deputy Head of Russian Finance Ministry. Mr. Moiseev, please, you're welcome on the stage. Up next is Alla Bakina, Head of Unified Payment System, representative of the Central Bank of Russia. Welcome. Up next is Alex Melikov, First Deputy Chairman of the Republic of Kazakhstan for Financial Market Regulation and Development. And Mr. Smelikov is joining us online. Up next is Vladimir Potapov, VTB Capital CEO and Senior Vice President of VTB Bank. Welcome, sir. As well as Denis Shilakov, First Vice President of Gazprom Bank. Welcome, sir. Alexei Panfyorov, Deputy Chairman of the Board, Vice President of Corporate Banking at Sovcom Bank. And the chairman of the session, Tigran Sargsyan, Deputy Chairman of the Board for the Eurasian Development Bank. Welcome. And welcome back. Welcome back. Yet another session Let's do this round table. Very, very excited about it. And before we begin, let me just say one thing, that we actually have 1,200 participants. And these people are joining us, by the way, throughout this first Eurasian Congress. So thank you for coming down here, offline and online. We have a big audience online, and they're here. So we are very excited about it. So welcome, and thank you for being part of this panel. We appreciate it. Thank you, everyone. Thank you, everyone on stage, and thank you, everyone joining us live via digital Zoom. And let's talk about the financial market. So one thing I would like to say, well, according to the framework agreement of the Eurasian Union, in line with this agreement, they say that by 2025 we're supposed to have one fully unified financial market. So we have 5 years to go. So, and we have certain expectations. We're wondering, what is the shape and form? What is this financial market? How are we going to compete? How are we going to collaborate? How is this going to work? Let's call it that way. What is the role of international banks, global banks, local banks, commercial banks, development banks? Because each stakeholder will have a role in the development of the system. There are so many discussions about also having absolutely seamless payment space so that we can seamlessly pay and transfer money and wire. So from country to country. What about FX? Because we still have different currencies. What about transformation? What are these transformations that are to take place for this unified financial market to actually be there and to be functioning? So the role of the government, the role of financial institutions is incredibly important. So us all, as of course the Eurasian Development Bank, we would like to get a better understanding of the vision, because we have our shareholders, and we would like to understand what kind of role are we going to play in this development. So, and to that end, I would like to give floor, before we begin, to Alexei Moiseev, as representative of the Ministry of Finance. So please, sir, why don't you share your vision about the whole idea? So please, sir. Yes, hello. Hello, everyone. Thank you for joining us today. We appreciate it. And thank you, Tigran. Thank you so much. Look, we've been talking about the whole unified financial market for so many years. So if I'm not mistaken, I think that the first time ever, I think we said the deadline was supposed to be 2015. Yes, that was the deadline. Now, 5 years later, we're talking about 2025. So we are postponing this. And of course, the insurance market, I think we're more advanced than the insurance market, but of course, far from what you can call a full unified roadmap, something that we can call a roadmap that will take us to the financial market. Not sure. I don't want to bother you with all the technicalities and trivia, but of course, all these things still there, still the same. It's about harmonizing. It's about harmonizing legislations, national legislations, harmonizing products and services, terms and conditions. And I'd say that a good example to follow would be a product that is so simple and so black and white, but it again as so popular as, of course, OSAGO, car insurance. We all know that, right? Anyone who so I mean, it's out there in every country. Every country has a saga, this insurance policy, but there's still limitations. So a policy issued in Russia, for example, cannot be used in Kazakhstan, etc., despite the fact that the legislation was enacted several years ago. Seems like, yes, we have it on paper, but in reality, it's moving very slow. Here's the point. One thing you need to know. Back in 1994, yes, a long time ago, Russia basically made a decision that, look, when it comes to the financial system, this has to be international. And look, a financial system, it's national in the first place, and that means that, all financial organizations are supposed to actually abide by the law, right? And the national law should dominate, should be the prime document that basically stipulates the rules of the game, so to say. So that was the idea. And then every other member state did the same. So we have the national legislation, and the government wants to take control of the financial system. We all understand that, for sure. And for example, even in the European Union, despite years of practice, still the national legislation dominates when it comes to the financial market. They still don't have it. Yet it takes forever. They still don't have it. So it's a very, very, every country, every member state believes that when it comes to money, when it comes to the financial market, it's about sovereignty. So they don't trust their neighbors very much. Right? It's a good idea, but they don't trust their neighbors very much. So they prefer to stick to the national legislation. So the only good example out there, I think Tigran knows about it. So we had this mutual recognition, so this document on mutual recognition, so that, look, we sort of trust or we sort of distrust, kind of a wishy-washy between Russia and Armenia. We had, well, several financial areas where we have mutual recognition, so we can do matching and things like that. But other than that, not much. So it's a bit of a conundrum, to be honest with you. So, and this is like a sad truth, sad but true, that unfortunately you can't just wipe off and just outsource your functions, right? And make whoever responsible for what you're supposed to be responsible as a national bank. But that said, the world, life's changing, and we have the roadmap, 5-year roadmap. And like I said, the deadline is 2025. And when it comes to the approach, and I believe that the Russian Federation should be playing a very active role. And it's a milestone decision, right? Because, well, if you want to join the WTO, you need to open up your market to insurance companies. And by the way, the draft is on the table. We have it in the Ministry of Finance, and this will be enacted. And look, it's a major, major step forward. And the reason I'm telling that, the reason I'm doing this, is that, look, it is something that, first of all, we're not expecting, all the global companies popping in. No. Of course, we expect, first of all, our partners to start expanding, not the global ones, but mostly the Eurasian ones. So maybe then the global companies will also start to, be more present on this Russian market. So, but as long as it works, as long as the competition is improving and all that, of course, there has to be competition. So one of the core things that we do is competition, because without any competition, I don't know about you, but when it comes to financial market, it's not going to work. The quality goes down, the cost goes up when there's no competition. This is like a textbook example. And this fact that has nothing to do with the discussion on the one hand, but it's this very, very important psychological, I would say, problem. It's a big obstacle. Yes, we have the roadmap. Yes, we have plans. These plans have been postponed many, many times. Like I said, we're kicking this can down the road. 2015, now 2020, then 2025. Hopefully, we can arrive there. Hopefully, we can do it, because like creating that unified banking standard for insurance, pension products, financial products, that is going to be a tremendously important element when it comes to integration. And of course, that will also create unified oversight, so that the people actually understand. It doesn't matter what kind of bank you go to, they all have similar supervision and they are similarly protected, and it doesn't really matter whether it's in Bishkek or in St. Petersburg, I will have equal protection. Well, good. Thank you. Thank you for this input. We appreciate it. Okay. Then there's another item that is currently being discussed. So the so-called mutual settlement space, right? Unified settlement space. And to that, I would like to talk to Allah. Allah, please tell me, what is the role of a unified clearing chamber, unified settlement chamber? What's the role of that chamber, and who should be at the helm of this process? Tell me. Well, thank you very much. Thank you, Tigran. I appreciate the input. It's a very important topic, and the reason for the importance of this topic is that, as you know, as this digital transformation taking place, and it touches every element of society. It touches the infrastructure, the suppliers, the vendors. It touches everyone, including the regulators. And as you probably very, very well know, when it comes to Eurasian space, there's so many things taking place right now and so many tremendous changes taking place alongside digitalization, speaking of global trends that truly change the financial market as we know it. There's more and more this the so-called new digital players, the mavericks. You see, IT companies are becoming financial companies. You see more and more newcomers. You see disruptions. So the new market players that are trying to disrupt the incumbents markets, and it's changing. The competition is changing. So banks are no more banks. Retail companies are no longer retail, and you see some of the high-tech companies are also becoming financial. So, and at the same time, we need to provide seamless services. And at that time, so the role of regulation, of course, becomes particularly important to make sure that the services are being provided. There are no disruptions when it comes to the actual service provision, and something that can actually stimulate the procedures and make sure that we can uphold safety and make sure that we can protect the rights of the end user, the rights of the consumer. So, and it's good to say that when it comes to Eurasia, when it comes to the process is ongoing. Yes, the work is being done when it comes to Eurasia. And we are working across several developments, and I think that we've reached some very, very good progress when it comes to cards. For example, for bank cards, we have two-way relationship between the cards in terms of settlements and acceptance. So, and any national card can be, accepted, so you can pay using that card pretty much in each and every member state. And we see that the non-cash transactions are going up. That means that more and more people trust this kind of bank payments. And just throughout 2020, despite the current situation, despite the pandemic, we see that the card volume went up 3 to 5 times. And the next step, the next big step that we're planning by 2021 is that we would like to migrate to a unified systemic interchange. And that means that you can pretty much use that same card issued at any of the member states throughout the Eurasian Union. So we're looking at full acceptance, and that means that we not only can pay at a store, at a supermarket, or maybe cash out at an ATM, but do P2P payments, right, and all sorts of other related services. Also, the instant payment infrastructure is a big trend. We have the instant payment system in Russia. As you know, I would like to expand it, considering other member states. And you know that the work is being done at the moment. Some guys are sort of more advanced, or like Russia, for example, we have been practicing it for more than 12 months, and the system works, and it's very, very effective. We see more and more operations there. We see more and more transactions, more and more banks joining this instant payment system. And the whole idea of it is that people, consumers, clients have access to safe and very effective and efficient payment opportunities. And we are discussing it with our member states within the Eurasian space. We're thinking about all the possible integration steps. And I absolutely believe that as of next year, there will be some real activities on the ground. I mean, we understand what we need to do. We understand we need to just so a little bit think as far as the operational activities, and figure out the settlement mechanism, make sure that it takes into account all the risks, all the mutual risks, and make sure that we agree on the tariffs. That's it. As long as we do that, fine. So, and of course, the huge benefit is that you can reduce costs and increase speed. This is the whole idea. So, and then standards, also very important. I said seamless. And the word seamless means that, look, it has to be quick, cheap, and reliable. So, and we are talking about ISO 2022. So, and that means that the Eurasian countries need to also uphold it. As you know, Russia is also issued some of the core standards for the market participants. This is one global standard, and when it comes to the Eurasian space, we are completely in tune. We are making sure that the approach is synchronized And the whole idea is that, look, we need to agree on the deadlines, and the transition has got to be tremendous. And you can only reach positive effect once each and every member speaks the same language and operates across the board using the same standards. So, and by the way, speaking of fintech, financial technology, it is something that we currently, so like an open API, open banking, and this is a tremendous initiative, and that actually boosts the relationship, make sure that the payment infrastructure receives this new steam, new fuel. And here in Russia, of course, we are improving regulation, we're improving technology, we're improving open banking. We are making sure that the standards can be implemented properly, not just in Russia and beyond, also across the Eurasian space. So we already know how to do it. It's just a step-by-step process. I have no doubt that starting from 2021, we can actually start moving ahead and do it step by step. And again, the point is that we can unify this whole process across each and every member state. And safety, of course, because every time we're talking about digital payment, online payments, right, card payments. So with the new technologies, with this whole new focus on digitalization and e-commerce, of course, it has to be safe, because cyber threats are there, and not a single project can be done, without overlooking the safety, the cyber security element, because the bad guys are there, as you know. So it's very, very important that when it comes to this part, we speak the same language, that we collaborate. It's very, very important that we have mutual trust and respect. Very, very important that we have one unified, trusted environment. And that is super important. And with that, like I said, the principles are there, the core components are there. So we already agreed upon it, and all it takes now is to implement it. So we spoke about the mission, we spoke about the intention, and the role of the Eurasian Development Bank. So look, and this is something that we discuss at the central bank level, something that we discuss in Russia, something that we discuss across the Eurasian space. I know that the federal government is discussing this role there. It's a very, very serious matter. So, and to have this kind of center, like a center of excellence, that could definitely promote de-dollarization, right? And diversifying away from the dollar and maybe the euro, right, into local currencies. So, I mean, this can absolutely be done. So we need, of course, there's certain things to be to be in place in terms of infrastructure, so that we know the conversion spread, affects conversion spread, the speed of conversion, the spreads, very, very clear cut, FX risk mitigation mechanisms, because we're talking about national currency settlements, and we want to make sure that it is revocable and final, so that the exchange rate is fixed, so that it's reliable, because we local currencies are quite volatile, and that's something that everybody knows, and we need to take that into account. So there's certain items that are quite deep that need to be resolved. And once we're done that, the National Clearing Center is a tremendous initiative. So, and it takes a lot of front loading in terms of work, in terms of consulting, in terms of just joining forces. And that's why we talk to national banks and the Eurasian development banks as well. So, but I'm sure that this will eventually be a very positive initiative. Yeah. Thank you. Thank you. Look, as a former head of the central bank, and as a central banker, of course, I do understand what you're talking about. And I completely share your idea that, look, the dominating role has to be the regulator's role, because we are talking about risk management in this very, very big initiative. And of course, we want dialogue. We want to work shoulder by shoulder to shoulder with you, and we want to do it together. And you absolutely correctly said that. Look, so when it comes to executive branch, when it comes to the government, and they have many, many times said and intended that, look, when it comes to settlements, we need to definitely use local currencies, the so-called de-dollarization. And the market is waiting, is looking forward to the infrastructure. How can I make sure that I can pay in national currency, make it effective, make it efficient? How can I make sure that the risks are under control and all that? So, and by the way, and thank you for being so open here. Thank you for this open dialogue. We really, really appreciate it. It's a very important initiative. So, without further ado, I would like to actually give floor to someone who has a thing or two to say about it. And joining us online, representatives of Kazakhstan. Oleg, please, sir, first deputy chairman of the Kazakh Agency for the Regulation and Development of Financial Markets. Sir, are you with us? Can you hear us? Can you see us? Oh, yeah, absolutely. I can see you. I can hear you. Thank you for the invitation. So you know what's up. So we're talking about this Eurasian situation about and Article 103 of the Eurasian Pact basically says that by 2025 we are supposed to be there. We're supposed to have one big, well-functioning, well-oiled financial market. Okay, and when the harmonization is done, we're supposed to have a fully functioning, unified financial market, as well as a national regulation. And you, as Kazakhstan, as one of the member states, supposed to have that regulation in place as well. So, what exactly are you going to do on top of what you have done so far? What is on your mind? Tell us. Well, first of all, I'd like to welcome everyone here. So, thank you very much for being with us today. And I'm sorry for being remote. So, I unfortunately couldn't travel, as you know, because of the COVID situation. I had to do the good old Zoom. But look, this process is, as you know, quite slow, quite challenging. Everybody knows that, and we're trying as hard as we can. And as you know, last October we actually installed a framework. We approved the overall framework understanding of how to actually have this well-functioning financial market, and the agreement is there, the understanding is there, the principles are there. So we all know what we want in that sense, right? In terms of harmonizing our approach, in terms of the key elements, they're all there. So it's not a mystery, it's not a secret. So be it securities market, be it payment, be it placements, or be it effects, etc., all of that is quite clear. And I believe that every national regulator wants to make sure that there's no arbitrage, to make sure that there's full financial transparency and stability. And this is something that we all want. So then harmonization, as we call it, it has to be done on a uniform standard. And we want to make sure that the situation is fair and that no country is disadvantaged or overly advantaged. So, and I believe that there's going to be an official framework license. So once the regulator is cleared, then the National Bank and all commercial banks, as well as other financial institutions, of course, there will be certain covenants, of course, and ratios such as the capital adequacy ratios and whatnot. So there will be certain standards and certain licenses. So, and it's not going to be a limiting factor. No, it is a factor that's going to help uphold the situation and make sure that all the members are fair, honest, that they all doing their job as intended, and there's no arbitrage, and there are no hazardous or adverse elements in the system. Well, that said, of course, every country is unique in a certain sense, and well, it's not necessarily apples to apples, and the speed at which we proceed is different. It is something that we need to bear in mind. But despite that, look, despite all the challenges, despite all the difficulties, we do understand that, look, we have a general understanding. The framework is there. So, by and large, we have consensus. Yeah, we proceed at different speed, but by and large, there is nothing that we cannot do if we put our mind to it. So, that said, as long as we want it, and this is something that is absolutely essential. So, and we have global standards and we have best practices, and this is something that we need to share in between the Eurasian countries, such as the definitions of financial services, the types of financial services, the way the services are provided, and etc. So all these need to be harmonized, as well as the way we supervise, the way we protect the rights and the privacy of individuals and whatnot. So, and finally, of course, as the final stage, there will be a national body created in each country that will jointly with other national bodies cross-regulate and cross-supervise this whole unified financial market. So it's a bit of a balance, I would say. So we're not limiting anyone's independence per se, but at the same time, we make sure that the national governing bodies cross-coordinate every step and route this integration. They analyze best practices, make sure that the system incorporates the best of what is available out there, and then on behalf of the unified Eurasian market can represent the best there is. So, like I said, the program is there, it's on the table, and this is an ongoing process. I have no doubt that we will definitely succeed in putting it on the ground within the reasonable amount of time. So, I think that when it comes to principles, number one, we need to first of all expand competition, and number two, we need to definitely adopt all the best international practices. Don't reinvent the wheel. It's all been done before. And look, we have great examples from Europe, from other countries, and when it comes to data exchange, consolidations, and the access criteria, it's all there. It's all been done before. So there's no need to actually put in the work and develop what's already there. All we need to do is take it and use it. So as far as general framework, it's already been done. And yes, I do understand that we need to harmonize financial products, but that's a separate issue. But I think that the competition will definitely be stronger, and there's no need to be fearful of opening up your market. For example, just to give an idea. For example, here's the kind of debate that we have. What about commercial guarantees? The acceptance or non-acceptance of commercial guarantees. So we need some basic criteria and standards again, based on best practices, and that says, once we do, we can successfully compete toe to toe with national banks, international banks, commercial banks, and whatnot. So as long as we have the same idea in mind, so that means that more people and more companies will have access, and that's good. So the competition is good. It's great for us. I mean, don't fear competition. Use it. Use the best standards and the best international practices out there. Thank you, Oleg. Thank you very much. One thing I would like to ask you. Well, what kind of powers are you ready to part with, to parse out? Because you will have to share some of your powers, not just responsibilities. Well, I think it's too early to speak about sharing powers. Or I don't think that anyone wants to let go of the power, right? Because first of all, we don't yet understand who does what, and it takes some transition time. I do understand that over time, our levels of authority in terms of oversight, in terms of regulation, will change for sure, for sure. So I would say that to begin with, the national body is going to be a coordinating body. We're not talking about sharing power or outsourcing authorities and things like that. No, it's about supporting the practices, making sure that there's an in-depth analysis, making sure that we uh, that we make that we install proper supervision, and then of course we can talk about the transition or sharing of power. Well, thank you, Oleg. I appreciate it. So Alexei, by the way, just reminded us that we actually tried it back in 2015, right? And it didn't happen. The previous deadline was 2015. It's been 5 years. It's not there. Now we say, okay, we'll be there in another 5 years. Now we say the deadline is 2025. Okay, and based on what Oleg just said, look, I sense doubts. It'll take a lot of time, is the thinking, because this whole regulation is not an easy thing, it's for sure, not an easy thing. So what is this supranational governing body, the super regulator? This is difficult. Yeah, of course, we need to talk to national banks, of course, because national central banks, they ultimately responsible, right, for the situation on the ground in each and every member state. That is for sure, right? And they somehow need to talk to each other and figure out, okay, guys, this is what the supranational regulator is going to be, right? That's the kind of authority that they have and whatnot. But this is difficult. And look at the European Union; they still don't have it. Look at how many years of debates and on and on and on and on. And yes, we're talking about the unified bonds and They have the European Central Bank and all that, and risk management and oversight, etc. And despite that, they still have very, very strong national banks, right? So it's a long, long way to go. Okay, so next question goes to Vladimir Mikhailov. Vladimir, please. So tell me, what about the changes? So tell me how these changes are basically evolving. Tell me what exactly you're doing. Tell me how you basically defining your work. Vladimir, please. This is a brand new world. I would definitely have a different approach now, and this year alone shows us just how much speed you get from these kind of disruptions. And look at the level of transformation. Look at everything we're doing. I mean, a year ago, this was unheard of, unheard of. And it's just a mere 12 months, we're seeing this incredible change, this evolution that decades of evolution squeezed into several months. So things can move fast. Don't underestimate the power of pain and the power of disruption. Things can move really, really, really fast. So, anyways, and we know exactly what needs to be done, right? And by the way, guys, you know that you can lose some of your savings, a lot of your savings, by the way, because I mean, people store their money in national banks, and look at what's happening right now. More and more people saying, "Well, the bank rates are very low. Why would I keep my money in the bank? Why would I make a bank deposit? Instead, I want to trade stocks. I would rather invest, right? At least my yield will be there." So, and I know the global rates, and let alone Europe or the United States. I mean, the rates are so low that keeping your money in the bank makes no sense. Of course, if the bank rates go up, of course, if they start hiking rates, sure, that would be nice, of course, because when the rates go up, of course, people say, well, why not? But because there's also inflation, so people don't want to see their savings, their hard-earned money, basically melting away. Nobody wants to see that. So, for sure, something that more and more people are becoming aware of, and the financial literacy is growing. For instance, we have several trillion under management. 99% of all accounts are done online. Nobody wants to go to the branch. They say, "Oh, go to the branch." People say, "What branch? Why would I go to the branch? I can do it online." So, and let alone flying or traveling. Now, forget about branches. Branches is the past. So it makes no sense to actually. So you need to adjust. You need to adjust. You need to be digital first. If you don't do digital first, then the savings will end up not within the Eurasian Union, but elsewhere in the United States, in Europe, in Asia, in whoever is better prepared to this brand new world, right? Because look, the Z, the millennials, the digital natives, whatever you want to call it, of course, they have their demands. They have a certain way of doing things, right? And you cannot tell them what to do in this regard. They invest and they keep their money a certain way. And look, it's their way or no way. So, and Russia has been faced with this.
И изменял регулирование инвестиционных компаний, там, защиты прав инвесторов с точки зрения того же.
So, and look, for instance, we had this, a Qualified Investor Act, right? And because of that, more and more people are joining the securities market. People invest, and instead of doing offshore, money stays in the country. People invest, and for example, the recent 4 placements we had. Look at the recent 4 placements. My clients alone, we had 4 stock placements, 4 IPOs. Самолет IPO, Ozon IPO, then Sovcomflot and Aeroflot SPO. More than 60 billion total demand from retail investors. Just think about it. And look at the number of placements. Look at the bond placements. Pretty incredible. I mean, these numbers, we're talking about more than 200 billion It's a powerful trend. It's a window of opportunity. So, look, if you miss that, that's it. You're done. Try selling a Belarusian bond or a stock. Try offering it at a Swiss bank. Forget about it. You'll never reach that client. Never ever reach that client because, well, this client will say, why would I invest there? I'd go somewhere else. So this is a global competition. So a benefit and advantage of this process is, look, there's a tremendous threat. We can lose. We can lose all this money. You will never be able to retain all the savings of people in traditional products, all the loans and all the deposits that you supply. Forget about it. All this money will disappear. People are smart. They're getting smarter. They will invest in other things around the world. So investment platforms, local powerful platforms is the way to go. So we need to open up these opportunities for people so they can invest, they can manage, they can create yield, they can actually see their savings and their investments appreciate over time. So we can do pre-IPO strategies, things like that on bonds, fixed income, or securities. But you should never limit yourself to traditional linear approach. Like, okay, is it allowed by the law? Is it allowed by the regulator? Okay, then that's what we're gonna do. So start with the client. Look at the client. Look at what they want. Try to do a match between the client demand and the product. So that's the only way. If you can do that, excellent. If not, then you're done. And then you compete with Singapore, with Switzerland, with whoever, whatever. So, and then we can compete toe to toe with these guys. If not, then your savings will melt away, they'll fly away, and they will end up in whatever countries that be able to provide this kind of infrastructure. So trust me. Trust me, online account opening, cross-identification, and products and services, there's going to be a big debate in terms of what the development banks can offer as an alternative investment. Trust me, the demand is there. People want to make money, right? So if you think that people want deposits, forget about it. It's not true. Considering the current bank rates, it's useless. Because of inflation, it's useless. People want to diversify their investments, their savings, and it's part of everyone's household. It's here to stay. And by end of the Russia, 19% of all total investments will be invested through securities market. And trust me, in 3 years, it's going to be up to 40%. That means that, look, we're talking about 7 trillion or even more of fresh money that will enter the securities market. Think about it. So you're either going to use it or you're going to lose it. And so, you snooze, you lose, as they say. So don't think about the past. Don't hold on to the past. Think about the future. The future is not with the savings and deposits. No, not enough. Well, something to think about, right? Definitely something to think about. And look, when it comes to competition, for sure, look, this is the kind of competition that we're looking at. And we need to definitely be broad-minded. And we need to look at how competitive we are as banks, how competitive we are in terms of products, in terms of services, and whether you like it or not. They see that when there's an opportunity, people vote with their wallets and with their feet. That's it. We all the same in this regard. People have a choice. When you have a choice, you'll definitely go where it's better. So it's not about patriotism, and look. We all know what's up. Okay, so I'd like to give floor to Dennis. Welcome, Dennis. Dennis, okay, here's the question to you. What kind of opportunities are you seeing here when it comes to commercial banks within the Eurasian space? What are you seeing here? So, what can be done to, I don't know, become more competitive, right? Not only within, but on a global scale, because we are competing with everyone here, right? It's one big planet. Yes, thank you very much. Can I have the slides, please? Yes, I'd like to have the slides. Well, number one, it's always nice to actually have an offline, and we actually offline and online. This is the first time for me, so it's always great to have this kind of framework. Really nice to have the audience, and I really appreciate it. By the way, I used to be. Actually, I'm a banker, and I used to be with the Western Bank, and then I stopped and I came back. So I represent Gazprom Bank. It's one of the largest Russian banks. And by the way, many of you guys, we all friends, and we've been working together for so many years. So there's one thing I would like to say. One thing, the name of the game is cooperative competition. That's they say, cooperative competition. So to cooperate and to compete at the same time. So be it European Development Bank or whoever, whatever. So this bank right there for you, the green, is where we have common interest, right? So as far as development banks and Yaber, by the way, it's a very unusual bank, and also commercial banks. So like I said, we can cooperate and at the same time we can compete. So what are the benefits? What are the advantages? Of course, access to liquidity in national, local currency, and to also national projects as well as local expertise. That is the huge advantage of development banks. On the other hand, commercial banks have access to all these participants, they have all these clients, and the local and international one. And of course, they have local and international expertise across multiple products and services. What is the difference? Well, the difference is in the principles and the definition. Right, because as you know, commercial banks have relatively high risk appetite. At the same time, the whole idea of a development bank is to have a lower risk. They are systemic, they're more conservative, they're about future generations, they're here to stay, they're always long term. So that means that this is where they don't meet. This is where they don't see eye to eye. So development banks have a lower risk profile compared to commercial banks. Otherwise, they will never have that sovereign high credit quality from the rating agencies. So, and this is where, at the bottom, this is where we actually find common grounds. For example, we can do mutual limits and settlements. We can do mutual lending in different currencies, right? We can do mutual consulting. We can work together on the capital market, right, and money market. When it comes to investors and investor pools, and including IPOs and SPOs. This is what we can do together. That's it. So pretty much, this is where I see common points. And this is what I do specifically. I'm in charge of capital markets, and a development bank can be an issuer, a borrower, or a co-runner, by the way, or can guarantee a particular placement or transaction. So as an example, for example, this is what we've done. This is a joint project between the Eurasian Development Bank and Gazprom Bank. And I think this so far has been very mutually beneficial, win-win relationship. So as you know, first of all, this is a very nice curve. So we're talking about over 60 billion in terms of issues, and we're talking about 10, to be more specific, 10. And basically, Eurasian Bank is a very active market player. And the whole idea about this bank is so that you can accumulate interests and create the right risk exposure. That's it. When it comes to Gazprom Bank as the runner of this deal, since 2013, we've been part of at least 10 placements. And we generally know how this works. We know the ins and outs. We know why investors buy this kind of risk, despite the fact that they can go elsewhere and they can park their cash elsewhere. So this is always a good indication. This is always a good kind of example. So, and let me explain why the cost of risk is so important.
Вы знаете, что прошлые годы этот стали в какой-то степени знаковыми для российского долгового рынка. Много людей, присутствующих в зале, приложили для этого.
So, and you know that many people, including myself, and by the way, Alexei, by the way, he's off, by the way, probably had a meeting or whatever, but he is one of the masterminds, and he's done so much for this market. Look, we had 2 sovereign bond placements from the Republic of Belarus and Kazakhstan, so that's 2019 and 20, and this happened early this year. So, by the way, the Kazakh issue is the placement is 40 billion. Think about it. And they did it through 3 tranches, and one of them is a 10-year tranche, at 7%. And this is unprecedented. It's never been done on the Russian market. This kind of money and this kind of placement. It's pretty unheard of. By the way, there were no friends. Everybody was saying, well, what are you doing? This is like, no, I mean, why are you pricing Kazakhstan the same you price Russian risk? I mean, it makes no sense. But look at where it's trading right now. You see the exact same people actually buying it and happy and making money on it. So the exact same people who criticized it, now they're actually enjoying it. So, and it sort of changes hands all the time. Everybody made money. Everybody's happy, right? So just goes to show that, look, somebody has to create the demand. The kind of arbitrage that was in upfront seems like artificial. Now it's well traded and everybody's happy, no complaints. So that's the kind of risk we're talking about. So that's the kind of exposure that we created jointly with the Eurasian Bank. So, and in the first case, in case of Belarus, so they were part of the syndicate, and in the second case, they were an investor. So that means that the Eurasian Development Bank must and should support these kind of placements, including a co-runner or a co-investor. So what else are we actually collaborating instead of competing? So there are many projects. Just to give you an idea, some of these projects, and by the way, they have a general parallel session there on projects. So this is, like I said, a very complex relationship. And we are open about it. So, for example, you know that we have a correspondence account of Nostra, and Nostra, so we have Kazakh tenge, Kyrgyz som, and also correspondence account in Belarusian rubles. So that means that we can actually, and I said that the Eurasian Bank has to be an infrastructure agent, right? An international infrastructure agent. So why am I saying that this is milestone? Because, well, think about it. There's look. When it comes to the capital market, it's about trade. That's what it's all about, trade and mutual investments. There's nothing else out there. Look at the slide on the left. Look at the volume. This is national currency. This is national settlement market. And of course, the rubles dominating, 71% within the CIS space. And on the right, you actually see countries where we currently have trade volume. So, and look at the gray area right there. Gray area is the percentage with Russia. So, and you see Kazakhstan and Belarus has very high indication, but similar Uzbekistan also very strong. So clearly we are moving in that direction. We want to make sure that all our neighbor countries and all our friends can do placements here in Russia in rubles. So I'm not saying that ruble is supposed to actually dominate. That is not what I'm saying. I'm saying that the economic theory is useless unless you have a common sense, a rationale, unless it is rooted in trade. And the whole idea is that, look, ruble is a big currency, it's a big country, so and therefore it has to be supported by the financial products. But looking ahead, what are we seeing actually? We're seeing that the Russian and the Kazakh market, for example, are now markets of mutual presence. So there are mutual placements and mutual borrowers, which is good. You probably know it, and let me tell you again that this Kazakh placement, the Kazakhstan placement, was done in two locations. So it was on the Moscow exchange and Kazakh exchange. So they were doing two placements, double placement at the same time, which is good. But we're still working to make sure that the foreign investors can actually enter this via Euroclear. So, by the way, the whole point is that, look, we are essentially aligning our market with the global market. And it just takes time, yes, but the more we do it, for instance, Clearstream, as you know, they now have a pre-settlement account, which is great. That means that we're becoming more open to European and global investors. Now, there's so many things that we can do, like green bonds, social bonds, sustainability bonds, COVID-19 bonds. There are lots of things to do. And these are the banks that have already done this kind of placements and the so-called responsible financing. And today, finally, we have the rules of the game so that we can indeed make sure that the central bank requirements, the so-called ESG, right, of funding. So, I mean, there are not that many, to be honest with you, but it's taking place. But look at the avalanche of deals outside. Look at the global. So look at all these investors. By the way, many companies say that up to 50% of their assets will be converted to ESG types of assets. That means that $20 trillion worth of money haven't yet been parked, haven't yet been invested. Think about it. So it's an unprecedented demand that is not yet fulfilled. Think about it. The demand exceeds the supplies many times over, and we haven't yet done it in Russia. By the way, yesterday we had a placement of RZD, Russian Railways, first ever socially responsible green bond. First time going to ITMA, actually social bond. First ever Russian Railways placement. And I believe that the Eurasian Bank could actually play a role, similar to other development banks out there, right, that you can see here on the slide. And you can do all of these, from green to social to sustainability to COVID, etc. And I would like to point out this interesting example, by the way. This is the BRICS Bank, the New Development Bank, or as they call it, MPD or MBR, whatever you want to call it, the BRICS Bank. And they have both the so-called green and the so-called post-COVID bond that are designed to actually help combat the pandemic. I took a lot of your time, but I am prepared, so I just wanted to give you the idea as it goes. So anyways, let's recap this one slide, and I can actually have a separate debate on that. So think about it. So as far as Eurasian Development Bank, we want this to be systemic. It is great that actually finally being systemic. That's what it was all about. Thank you. Thank you, Dennis, by the way. Thank you for this presentation. So thank you for being so fundamental in your presentation. So really enjoyed it. Really something to think of. Absolutely. And last but not least, today on the panel, we have Alexei from Sovkov Bank. Welcome, Alexei. Please tell us, what's your take on this? Where do you see this whole development? Where do you see the competition? Where do you see the whole framework? Is it fair to say that the banks actually competing in the Eurasian space, the different national banks competing, do you feel the competition? You're a commercial banker. Do you see the competition between commercial banks and development banks, or are they all separate? Please, Alexei. Alexei, you have the floor. Thank you very much. And look, Dennis was so fundamental. I have nothing to add, really. He took the word out of my mouth, to be honest with you. And in terms of goals and objectives, in terms of what we need to do as development banks and as commercial banks, the road is clear. And all I have to say is to confirm again that, yes, I fully subscribe to everything said. And look, we understand the risks, and we need to help mitigate the risks through mutual activity. Yes, we're very active on syndicated loan space in Russia and the CIS space and the Eurasian space. We had at least 14 deals in the past 12 months. We're very big on the syndicated loans. And unfortunately, we haven't yet had any joint projects with the Eurasian Development Bank, but hopefully there will be one in the pipeline. So, and look, when it comes to, one participant or all participants or several participants, we have goals and objectives, and everybody's doing their part. And as you probably well know, there's also regulation. We should never forget that. And a commercial bank has its own profile. There's a certain risk profile, and you have national bank supervision. So, and as a commercial bank, there's a certain mandate that we pursue, and we have our limits. So, be it a syndicated loan or whatever other product, but we have a certain mandate, we have certain confidence, and we have to stay within a certain risk profile. So it's a heavily regulated market. So, like I said, despite that, we believe that there is room for joint activity, and the previous presenter actually proved that. And I also agree that the time is now. The time is against us. Think about it. Because look, the borrowers and investors, they will not wait. They are tired of waiting. There's a powerful trend, and the money competes with everybody. Look, deposits are becoming less and less popular. The rates are too low. People are becoming financially savvy. They don't want to sit and wait and look at their money being the same. They want money to grow. And look, especially with the new generation, the digital natives, they're completely open to all these online investments. So it's so much easier for them to actually figure out what to do. And now, Look, we need we need to be completely open-minded here. So it's a global competition, and the window of opportunity is not going to stay open forever. We need to be as quick as possible. Otherwise, we're just going to, find ourselves irrelevant. So something that we need to bear in mind that this can be very, very painful. And we're getting so many requests from private investors, people that have never done any investments. I'm talking about by my bank's clients. Now they're open. They want to invest. They are doing the so-called self-disruption. We have retail customers of my bank disrupting themselves. They finally become aware. Why am I doing these deposits? It doesn't make any sense. There are so many opportunities. I can invest in stocks, bonds, FX, etc., etc. And they all chasing these opportunities. So, and we as a bank have to be ready to offer this kind of opportunity to customers, or else they go away. So I'm not even talking about the competition here. So as far as competition, I don't see much competition. There's a lot of bilateral deals, but the competition as such, I don't see it much. I don't see much of it for now. So and we are very, very comfortable here when it comes to the relationship. And look, when it comes to financial institutions, different development banks within the Eurasian Union, we are on very, very good terms with companies. And as far as Gazprom Armenia, for example, mostly oil and gas companies, mining companies, infrastructure companies. So we've done multiple deals in Russia and in former Soviet Union. So we don't see any bottlenecks or any unhealthy competition. So it's great. Every time you want to do a syndication, no problem. All parties come together. Banks are very excited, and there's a very, very productive experience. So I believe that it has to be done on a bigger scale. And of course, infrastructure companies like the Eurasian Bank should be a catalyst of this process. Well, thank you, Alexei. So thank you giving us peace of mind. And because when it comes to unified financial market, they all say that, oh, the doomsday scenario, stay where you are, don't rush it. All the big Russian banks will come and kill all the smaller banks, and there will be no more local banks, only the big Russian banks that they will dominate. They will do through M&A or hostile acquisition or whatever, that they will dominate the space. It's not happening right now. It is not happening. These are just unsubstantiated fears. So anyways, I would like to thank you guys for being with us today. Appreciate it. And please, you can we continue, by the way. Yeah, so because we have part two, and we yeah, so
Приглашаем на сцену
So I would like to have Andrei Shishkevich, our chairman of the board of Belarusian Development Bank, right here on the stage. Please, sir. I would like to also have Vladimir Mau, the dean of the Russian Academy of Economics at the president of Russian Federation. Please, sir. You have the floor here. Welcome. I would like to also have on the stage Nurlan Namytov, chairman of the board of the Russian Kyrgyz Development Fund. I would like to also invite Grigory Marchenko, an aide to the chairman of the board of the Eurasian Development Bank. So, guys, so let's continue, right? Show must go on, and let's continue the debate, right? Look, I mean, the previous panelists have laid down the foundation, so lots to talk about, lots to discuss. So let's do it. Let's do it. We had Andrei Kazimierich. We spoke about the relationship, the Eurasian Development Bank, the Belarusian Development Bank, the cooperation, and all that is amazing. That is very, very inspiring. Make no mistake, all of that is incredibly inspiring. So what about you? So, as a representative of the Belarusian Development Bank, what exactly do you do that is out of reach for regular commercial banks in Belarus, for example? So, look, just like any other development bank, Belarusian Development Bank, number one, talks about, so as one rule, we never compete head-to-head with commercial banks because we're not there to compete. We are there to develop. It's a development bank. So we don't eat their bread. This whole idea, look, the point is that what is our role, right, in that case? Where do we step in? How do we make sure that don't kill the competition, being a development bank? That at the same time, well, the whole point is about risk, right? The kind of depth of risk that we can do. Look, we are the last mile lenders. We are ready to provide funding to those projects that are outreach for commercial lenders. No commercial bank will fund what we fund. I think it's a bad, it's a really bad, I would say, idea, because look, I think it's too rigid. I don't think it's the right approach, because I believe that development bank should be market-based. And we don't want just to be an agency that takes money, other people's money, and then allocates funds into not so high quality projects that no commercial bank want to touch. So that's not what we want to do. So to talk about should we fund projects that commercial banks don't want to fund, my answer is, look, as development bank, we want to fund projects that commercial banks want to fund but can't. Want but can't. So it's about long-term funding that we have that they don't have, maybe subsidizing the interest rate, right? Preferential treatment so that we can provide a preferential rate that commercial banks cannot provide, and also spreading the risks, sharing the risks. Some of the big fundamental projects are so big that the risk-sharing profile will not allow to do it themselves. This is where they need us. So, like I said, quality projects, and trying to be allies of commercial banks whenever they need to share risks, whenever they need additional funding, and whatever they need expertise. So we're talking about investment lending. We're talking about infrastructure lending. We're talking about things that are very, very sensitive to time frame, long term. For example, you know that we have a minimum benchmark. For example, we have a certain minimum break-even point in terms of duration. It's a minimum threshold. Also, let's not forget about small and medium-sized companies, where we provide funding to our partners, our leasing companies, funding in national currency, where commercial banks are hesitant, and also in foreign currency, and therefore we raise lines of credit from other international companies, and we are talking about longer durations and cheaper funding compared to traditional commercial market rates. So, and thus, through commercial banks, we then provide this funding to SME clients. And as you know, SME clients always have a shortage of long-term funding because they're not necessarily the forte of commercial banks. And the third area where we see cooperation instead of competition is trade finance and export funding. So basically, we're an export-import bank of Belarus. So we find, on a subsidized basis, of course, from the federal budget, non-residents, other companies that buy Belarusian products, again, on a classic market rate, as well as any exports by Belarusian companies out of Belarus to any global market out there. And this is a great example. This is the market that was developed. As you know, we used to be an exclusive creditor, an exclusive lender, but there's currently an amendment to the Act. And this amendment will allow any commercial bank to join in to actually provide export funding, trade finance, and get also a subsidized rate, and to, to whatever country that is ready to create an exposure to Belarus. So it's no longer the role of the legislation. So I guess that exclusivity is working with difficult markets, rogue markets. This is where you need to be very, very specific, where you need partnerships, you need other governments, like in Africa, for example. Not, show me a commercial bank that is ready to go to Africa, but we have African development banks, right? And we have Pan-African development banks. So this is where we can develop. But when it comes to Russia, well, our Belarusian banks are ready to go. And many of them have their parent banks in Russia. So they could actually lend directly on commercial contracts, and they are ready to share these contracts with us. And we are happy to step in and support their funding. Now, one more thing. Where else can we, I would say, well, yeah, there's natural competition when it comes to funding. When it comes to funding, us as well as commercial banks raise from the same markets. Yes, we don't take retail deposits. That's true. But when it comes to bonds, when it comes to placements, yes, we sort of compete for investor money. But at the same time, I don't think it's a pure competition. We actually enable more and more participation. And Gazprom bank representative, by the way, said it best. So it's a great example, something to be said about speeding up the whole idea. So we need to be quick. We need to enter the Russian bond market, because the Ministry of Finance already done it. So Euroopt, is Belarus's largest retailer, has done successful placement. I think that just goes to show that the Belarusian Development Bank can be a very, very attractive quasi-sovereign issuer. So, and again, we love Russian rubles, no problem. Ruble funding, no problem there. So we're ready to be there on the Russian market. So, and like I said, once again, I do not believe, and again, being a little bit self-critical, I don't see myself as a competitor to commercial banks. Actually, vice versa. We try to always position ourselves as someone who's always eager to step in and to share risks if necessary. Well, thank you. Thank you, Andre. Thank you very, very much. Thank you very much for that, for your very valuable comment. And I would like to give the floor to Nurlan Taktabekov. And Nurlan is the chairman of the board of the Russian Kyrgyz Development Foundation. So please, sir, why don't you tell us about what exactly do you do in terms of Russian Kyrgyz Fund? Oh, and what is your place on the financial market? Tell us about what you do and your activity and your relationship with commercial banks and development banks, or maybe you have your special niche that you occupy exclusively that no one can touch. Maybe because you have a government protection and you have some significant advantage in this regard. Yes, ladies and gentlemen, thank you for having me here. I appreciate the opportunity and thank you for giving me the floor. So look, and it's a very important forum. So development banks, as you know, play a very, very important role in developing and developed countries alike. So the fund that I represent represents a unique development institution. So based on mutual respect and development between Russia and Kyrgyzstan. So over the past 5 years, we've been growing very significantly and contributed to development of Kyrgyzstan as a country. So we are doing a lot of local projects as well as trying to promote exports out of Kyrgyzstan. So the risks are minimal, simply because there's a balance when it comes to decision making. And when it comes to operational activity, we have both the Russian members and the Kyrgyz members, because it's a joint foundation between Russia and Kyrgyzstan. So We were officially established in 2014. So the idea of the fund, we can promote economic ties between Russia and Kyrgyzstan, so that we can develop further Kyrgyz economy, so that we can be better integrated into Eurasian space. So when it comes, we basically focus on long-term funding. That's our sole responsibility. But at the same time, we are very limited when it comes to the type of lending, such as we look at agriculture, we look at industrial sector, but we don't fund retail or housing or mortgages or consumer lending or any of that. And we try to always avoid any direct competition with commercial banks. Now, when it comes to development banks, you know that, of course, we accumulate a lot of bank assets in both developing countries and developed countries alike. And the job that we play is about integrating the country into the global market. So therefore, when it comes to the Kyrgyz market, we play a very particular, very active and very big role. So when it comes to the overall capitalization and the assets under management, I would say that we represent 16%, 1/6, of the total capitalization of the Kyrgyz bank market. And as far as our portfolio, X mortgages and consumer lending, I would say that we represent about 13% of all assets under management. Now, if you look at long-term loans, we occupy up to a quarter of the whole long-term funding in Kyrgyz Republic. And we have a number of advantages, such as low interest rate, particular subsidies, and longer maturities. So as a result, we play a direct role when it comes to developing the Republic, its infrastructure, its economy, and we have managed to dramatically reduce rates and provide cheap and long-term funding to local companies. Since the beginning, since 2014, when it comes to 12-month and beyond, so we have managed to reduce rates by more than 6 percentage points in foreign currency and by 5 basis points in local currencies. So we particularly focus on private businesses. And because of that, we mostly focus on two big lines, providing big loans as part of infrastructure or direct funding, as well as providing targeted funding to other lending institutions so that they can fund small and medium-sized enterprises, both local currency and foreign currencies. For that, we try to cover as much ground when it comes to borrowers as possible. Now, we are very, very big on SMEs, and we help lend either directly or through commercial banks. So the idea is for the SMEs to have better integration and better access to resources. Now, our partners in the Republic managed to provide better terms and conditions, subsidized rates to SMEs, and improve the tenors of the loan. Now, as of 2020, we have approved about 3,000 projects so far, totaling $500 million. Then, as far as the projects, we are talking about 74 projects, about $300 million. And just to compare, look, we are talking about something like 10%, I mean, 20% of the total Kyrgyz Republic. And we also play a very, very big social role. So if you look at direct funding as well as small and medium-sized funding, so we are growing at around 18% per year. Now, SME borrowers are actually giving us a 25% return on investments. Tax collection is up 21% due to improvement in production and therefore creating additional employment opportunities. In terms of exports to Russia out of Kyrgyzstan, it is up 34% year on year as of 2019. So by 8% in the CIS countries. So, and we're creating thousands of new jobs. And through that, improving overall economic situation. Of course, when it comes to the pandemic, that definitely caused a reduction in the overall economic activity, for sure. But it's a temporary thing. And the idea is to make sure that we make our economy more resilient. And because of that, look, the local economy become vulnerable, was very vulnerable in many, many ways. That reduced domestic economic activity. So, and our local currency as well as domestic demand was also hit. Because of the current situation, our foundation was one of the few ones to support through multiple anti-crisis measures, provide direct funding and targeted funding, primarily to SMEs. We provided grace holidays, interest rate holidays to many, many companies. So we are also easing up on the regulation, and there's also a ban, temporary ban on interest payments, again, to help out local companies. So the idea is that we can supply funding to the local manufacturers, and the same goes for combating COVID. So we installed the rate at 2% for any company that is producing masks, sanitizers, and other COVID-related products. They have a special low funding rate. So we also provided several innovative products, such as cluster products across 4 areas: for dairy, for meat, agriculture, and fruit and vegetables. So besides that, we're also planning about plan to target other markets such as cattle, such as wool, and also energy market. We are also providing target products for the tourism market. So ideally, we would like to engage our local competitive advantages so that we can make the market more attractive to other countries from both the CIS space and beyond. So our fund is eager to collaborate with other development foundations and commercial companies as well. Now, as far as what we do, speaking of priorities, I would say that the priorities for myself and for the foundation, I would believe that it's the services industry, services, tourism, and we have brand new cluster. And like I said, industry by industry, this kind of cluster-based approach is very, very effective. It's very effective. Do you know that Kyrgyzstan, by the way, because of the development fund that I represent, is fully sufficient in terms of sugar. So we don't import any sugar. We are looking at about 100,000 tons of sugar per year. And because of the loan, we managed to actually reanimate 2 formerly Soviet production facilities, cane sugar production facilities. So, and they basically develop about 100,000 tons, 700,000 tons. So we funded the whole value chain from farmers to we provided leasing to buy farming equipment, production lines and whatnot. So we managed to basically revitalize in a matter of 3 years. So, and right now we are fully self-sufficient in terms of cane sugar. And the same goes for milk, meat, and not just for home use, but also for exports. Thank you, Nurlan. Thank you very, very, very much for your work. A very, very important work, by the way. So, and I'm sure that the participants now a much, much better understanding of what exactly this Russian Kyrgyz Development Fund doing. So, Grigory, you're next. So, we've heard from everyone, right? And look, we have 2 presentations from Grigory and from Vladimir. And they're here. And now you have an opportunity to round it up. So please, Grigory, floor is yours. Thank you. Can I basically focus on a discussion on something else? So how about the PPPs, private-public partnerships? And it's a compromised mechanism in Russia because of the bad design. It's almost like a curse word in Russia. And I have a very big presentation, but considering that we are very short for time and we're about to have a big session next, and just to make sure that we're not late, let me just say one thing. There's a link right there. There's an article, a big article about PPPs in Kazakhstan and in Russia. So if you guys are excited about that, please read it, lots of very important information and more than 80 different links to important sources. So just one thing to say, look guys, we need to reinstall PPPs as it was designed originally back in the 90s, because the idea itself is amazing. So we can fund big infrastructure projects, and the whole idea here is making sure that we can spend budget money effectively. So, and this has to be done by the independent committee from the Ministry of Finance, and this has to be done on a cost estimate basis and on a post basis, the once the project is done. Unfortunately, that was never done properly. So, and many people believe that private companies are doing it, and the government will actually pay for whatever mistakes and for whatever wrong cost estimates and forever over budgets in the project. So, like I said, we need to focus on big ones, like, I mean, talking about $50 million and beyond. So that's the whole point. And the funding should be in local currency. There's no foreign currency lending, only local ones. And that's what Dennis and others were talking about. There's something that, look, we need to do. And look, the last currency that ever funded local project in foreign currency, and that was in US dollars, and that was Turkey, by the way. You know what they did? They invested more than 30 billion, and then because of Erdogan's president's decree, they actually banned it because the liras, Turkish lira, went down several times, depreciated, and therefore these projects became so super expensive that it was like the cost went up 3 times because, as you know, you pay through local currency. So therefore, it made no sense. So we focusing on urban development and design, because that's where people are. So because there's what we call city environment, city dwelling, there's certain facilities like, for example, recycling, water treatment, things like that, and many of them are far away. But to make it work, we want to make sure that there's some sort of a uniform legal and administrative structure, such as the so-called agglomerations. So, and the point is to make these projects profitable, and they're not that many. They're not that many. I would say 15, maybe 20, not more. And we also need to think about, and this is the Eurasian Development Bank, where can play a big role also on transportation projects and things like that. So, and of course, we also need to amend the legislation, both in Russia and Kazakhstan, as well as other member states, to make it work, to make PPPs work properly, private-public partnerships. Now, speaking of participation of commercial banks as well as national investors, look, 90% of all PPP funding is done through bonds. It's done through bonds. Okay, so, and when it comes to local funding, this is where insurance companies, pension funds, and national and commercial banks can be co-investors. Okay, and I would say that L2 which is in the city of Marseille, you know, that's 165 million euros, and without any credit reinforcement, without the monoline insurance companies. So this is an amazing project, I would say, something to learn from. But that's in the city of Marseille. So, and that's all from me, and the slides are available. There are lots of valuable links. Highly encourage you to read those articles. Okay, the mic's on. Thank you. Look, I also highly recommend you to read that article. The article that Grigori just mentioned. It's a big article, very important article, especially those guys that are very interested in the whole idea of government, public and private partnership, the collaboration between the government and private sector, especially the Kazakh environment. So the lots of very good, I mean, very interesting experience there, and I mean, some of the role models are there. So I mean, the way it should be done properly. Anyways, Vladimir, now something about you. Please, you have the final say. What say you? Well, thank you. Thank you for having me here. And when it comes to development banks, is definitely changing. And it's not just the pandemic. There are lots of other things. And this is the way the macroeconomic situation is developing. So originally, of course, if you look at the origins of development banks, it was basically designed to support certain industries. It's about investing long-term projects, right? Helping big infrastructure projects. Why is his microphone so far away? Damn it. Also for the national and international projects. So this is where regionally the development market this is where the development banks have to, finally. And besides that, when it comes to international experience, so development banks also insource, best practices from other countries. So because it's not just about money, it's about also experience. So like if you look at the developed world in the past 10 years, we have basically found ourselves in a very, very weird situation. And it has two specifics about it. Number one, the money is very cheap. The funding is ultra cheap. Think about it. The rates have never been so low. But that means that you can actually blow up your budget deficit, right? And at the same time, you can spend. But there's one more thing. Well, for example, something that you can explain, but at the same time, not a single explanation is sufficient. So, such as there's a tremendous gap. I mean, the same for developed and developing markets. There's a tremendous gap between the savings and the investments. So, when it comes to developing countries, investments have always been ahead of savings. But what you're looking at right now, and the situation is actually low. I would say savings exceed investments. Even in China, by the way, savings more than 40% of GDP in China. In Russia, more than 20%, but it's going there. So we can discuss forever of why it's happening and why the people are saving more. Maybe this has to do with the fact that there's uncertainty, people don't know what to do because of the current situation. We don't know what to invest in, and you never know, right? Things change. So to say, things change, and also partially, I mean, the very fact that when it comes to long-term funding, I mean, long-term funding is becoming less and less effective. There are new ways where you don't need long-term funding. For example, like shale oil. What is the difference between traditional oil and shale oil? Not just the technology, but because the capex is closer to opex. But it is not where you need long-term funding. It's different. It's quick. You can start, stop, right? Because the whole shale oil was based on banking money, so bank loans. And that is a separate track, of course. That is something that we need to discuss separately. But the traditional paradigm of long-term funding and the requirement for long-term funding is now, I'd say, becoming less favorable and less attractive. And besides that, also ultra low inflation. And when the inflation is so low, so savings start to dominate our investments. It's easier to actually keep money rather than invest, right? So, and that, of course, opens up tremendous amount of opportunities, right, for those who can target these pools of liquidity, especially for development banks. And I would let me list some of the functions, such as the fact that banks are essentially they don't, I mean, to say that the development bank is not a commercial bank and doesn't care about money, it's kind of a weird statement. But on the one hand, there's the government behind this bank, and the development bank shouldn't be super high profit, but at the same time shouldn't be negative, right? It shouldn't be profit negative. It should be unprofitable. And of course, there's a lot of politics behind it, but I believe that a development bank albeit low margin, but it has to be a positive margin. That's what I truly believe in. Otherwise, you're basically sponsoring dead meat that shouldn't be sponsored. And of course, there's also social responsibility and, you know, sometimes a development bank would step in where, I mean, and because of the lower cost of funding, and this is a tremendous opportunity, of course, so we can do so much in terms of projects in each and every country. And this is definitely a big role for us. Also, the green economy, green bonds, and the green investments, something ESG, the whole ESG topic. So here, like it or not, so we don't see that much activity here. And the Fed, by the way, is talking about it, and Lagarde, but from ECB, is talking about that. But in Europe, it's a bit more because ECB has a narrow mandate compared to the Fed, because ECB is mostly targeting stability, but the Fed is a broader mandate. But you need to take into account not only the effectiveness, but also the nature of the investment, the climate impact, the environmental impact, etc., etc. I don't know yet how you can do that, and what exactly Fed is going to do about the ECB, the whole ESG approach. But it's an important topic, and I know that the central bankers are discussing it. But I think it's more of a development bank domain rather than the national bank or the central bank. So, and besides that, don't forget that some of the investment activity is quite low. I mean, even the transnational corporations, they also have difficulty with that. So best practices are becoming super important for every development bank so that we can revitalize those areas that need revitalization. And just to wrap it up, let me just say that, look, when it comes to central banks, they say it's a land of last resort, right? Someone who can lend when nobody else can. But at this day and age, considering new macroeconomic situation, and we don't really know, by the way, whether it's here to stay or not. We know all we know is different, right? When I say forever, it doesn't mean forever. Never say forever. But it's a long-term play for sure. And here, of course, we are beginning to see a problem, and that's called the investor of last resort. Yes, when it comes to the situation where investments are below the savings, therefore, someone who can invest where investments needed, but not sufficient. I think that's where so development banks should step in, right? Definitely should step in and play a dominant role, not the Ministry of Finance. Okay, good. Well, dear ladies and gentlemen, thank you for being with us today. Thank you, the speakers. Thank you, the people. Thank you, everyone's watching. And unfortunately, we're out of time, so we definitely need to stop. And unfortunately, we don't have time for Q&A. And look, just one thing to say here. As far as the Eurasian Development Bank, this is a very important topic, especially considering the fact that, look, we have developed a very, very ambitious roadmap, a very ambitious roadmap. So on the one hand, we are a supranational organization. We are an international organization. We have 6 founding members, and that is a very high bar. That is a very, very high bar. And that just goes to show that, look, we are supposed to be in charge of integration projects. But on the other hand, we are a development bank, and that means that we need to understand our, mandate, our niche, our play, our relationship with other development banks as well as commercial banks, because this is not an island. Yes, there are other people, there are other participants, other stakeholders, and they all have their mandates. And thirdly, so when we execute the mission, we need to also be very, very mindful about the actual bread and butter of commercial banks. And by no means should we occupy their niche. So, because commercial banking is absolutely important, but we should be their ally, we should be someone who they can actually lean against, right? That's the kind of dialogue, not head-to-head competition, but being a friend and an ally of commercial banks where necessary. So, and I thank you, all the speakers today, for helping us to give a better view on what's happening in the world today, including Eurasian space. Thank you. And with that, we adjourn the session. Thank you for being with us, and we are going to start this session in the big hall very shortly. Thank you.